So, what exactly is the Bank of Ghana's gold coin investment? Isn't it the same as Mensgold investment? How better is it as compared to buying dollars? And how safe is it to invest in the gold coin? Stick to it. Let's find some answers, but follow carefully. In the bid to stabilize the Ghana cedi, the Bank of Ghana has issued a domestic gold trading system called the gold coin, which will allow investors to legally purchase and hold pure gold in the form of coins guaranteed by the central bank for easy buying and resale transactions through the commercial banks. It means that people can now walk into a commercial bank, purchase some gold coins and keep them as a store of value for their money or a form of investment for higher returns. Significantly, the price value will be determined by the global gold prices and the dollar to cedi exchange rate. The gold coin seeks to address two important issues of the economy. First, it will serve as an alternative for those who keep holding their money in dollars in their bid to avoid inflation. In that, the Bank of Ghana is suggesting that instead of buying and holding dollars, investors can now hold the value of their money in the gold coin against the same dollar to cedi exchange rate. Second, the gold coin will empower investors to legally and easily trade genuine gold domestically as against the global gold prices. The Bank of Ghana guarantees that you can walk to any bank and buy or resell your gold coin at official rate without the stress of looking for customers. The gold coin presents two major opportunities to its investors. First, it is traded against the global market price. For that matter, investors may earn higher gold return value whenever global gold prices go up. Second, because the gold coin is traded against the dollar to cedi exchange rate, investors may earn even more in terms of cedi value if the dollar to cedi exchange rate goes up. But isn't the gold coin investment the same as Mensgold strategy? Let's find out. Mensgold was pronounced Ponzi because it took license for only gold trading, as in buying and selling of gold, both domestically and globally. However, they tried to act smart and started taking deposit of cash from customers without issuing them the gold plate. Instead, they offered their customers a supposed fake promise of higher return on their investment. Here's the trick they use. Supposedly, Mensgold used gold to lure people to deposit their monies with them. Mensgold would then go ahead to keep the gold with them, but promise to give customers a 10% profit return every month. This profit, they said, was going to come from their global gold trading. Meanwhile, the global gold market was never yielding 10% profit per month. Allegedly, the gold plates were only used as a camouflage to win the trust of people. Mensgold was only paying returns of their past customers with the monies of the new customers. If Mensgold ever stopped getting new customers, they would struggle to pay their current customers and their previous customers, kind of robbing Paul to pay Peter. This made their strategy unsustainable and fraudulent. And if you don't believe this, ask yourself, why would someone be buying and selling gold, but whenever a customer makes a purchase, they keep the gold with them and not the customer? Again, why were they not able to pay their past customers when the Securities and Exchange Commission only halted their activities and they weren't getting new customers anymore? Let's be wise sometimes. In the case of the Bank of Ghana's gold coin investment, investors have full access to their investment because the central bank allows them to trade their gold coins against the global market value and the dollar to cedi exchange rate. If you buy the gold coin today and the global market prices go up, your gold coin's value would also increase. That is first gain. And if the dollar to cedi exchange rate also increases, then you would earn even more in terms of cedi. So the key difference is that while Mensgold was never transparent with its customers and never allowed them to trade their gold directly with the global market prices, the central bank's gold coin system gives investors full access to the global market prices and the dollar to cedi exchange rate. And at the same time, there is a non-negotiable guarantee from the central bank that its gold coins are pure and can be resold through the commercial banks anytime. So in short, the Bank of Ghana's gold coin investment is kind of transparent and guaranteed. However, there are some few risks investors must pay attention to. Number 1, global gold prices are not stable in the short term. Investors can lose part of their money if global gold prices go down. But in the long run, global gold prices have almost always gone up. Number 2, dollar to cedi exchange rate fluctuates every now and then, and investors would have to take that into consideration. Number 3, considering the fact that this is a new domestic investment, we might not know what exactly to expect, whether the commercial banks are going to cope with the central bank for smooth transactions or not, and whether or not the government's interest in the scheme might have a negative implication, just like we saw a U-turn in bonds during the debt restructuring. The last and most important risk to consider is security. Keeping gold comes with a lot of risk and cost, which means that investors must find every means possible to keep their gold safe. I just hope I did not confuse you. And if you think this information was helpful, kindly follow us for more tips. This was completely not a financial advice.